You're unmuted, Anthony.
Nice. Can you hear me?
Got you loud and clear. Very nice to meet you.
Nice to meet you too. Thanks for having me.
Okay, Anthony. So there's a share function. It's a green box, and you could show us your setup and some of the things that we're going to be talking about today. Beautiful. Okay, buddy. So you're here today because somebody on Twitter in my stream said, please interview Anthony. So, you know, ask and you shall receive, and thank you for accepting our invitation to be here. How long have you been trading, buddy?
I'm 22 now. I started when I was 15, so
wow.
Just a little over 6-7 years.
Okay, so tell us about how you started trading at 15. Was it, you know, did you have a mentor, like maybe your family was involved in the markets, or how did it happen for you?
So actually my parents had always been in stocks, either investing through, you know, like Bank of America or like Merrill Lynch or themselves. And I remember being around them during like the crashes, and I was so fascinated by seeing things like that I started researching a ton when I was, you know, 12, 13. And I never even had, you know, money until I was 14, 15, because I got a job as a busboy and ended up being a food runner. So I got promoted a year later. But I would take all that money and I'd put it into the market, and I would just start messing around. I used to run on simulators, and I joined a cross-country track team my freshman year of high school. And my coach for that was actually he used to work at Fidelity, and one of like up in the like management place. So he was very familiar with options and everything. So he's the first person who taught me options. And then I went on, I do mostly options. And then I went started getting on Twitter, the financial Twitter community. And then there's this man on Twitter named, you might know him, Smarter Trader, named Samir Parikh. And he's just a fantastic options trader. And so I've been following him for the last few years, getting a lot of personal mentorship from him as well. And now I trade full time. I trade between classes when I was in college and high school. And now I run a hedge fund that I started in July.
Wow. I tell you, what's left to accomplish now at 22?
You got to grow it.
There you go, buddy. So, all right. So now the work begins. So let me ask you, I'm looking at your setup here, and I see you trade pretty naked. You just have the volume, open interest, and you're mainly an equity guy, right?
Yeah, mostly an equity guy. Sometimes I dabble in crypto or, you know, other things like that, but it's almost always equities.
Okay. All right, so I remember the tweet the day I invited you, and to me it had a pretty bullish bias. And, you know, the people were, you know, some of your trades were working out great. Has what happened this week changed your view short term?
Yeah, so, I mean, when I posted that tweet, I saw what I was seeing was a rotation into growth and value for the end of the year.
Right.
And, you know, I wrote that Roku might test high of year. It was pretty close, and then it got hit with a downgrade. Shop would break out, and this was when it was at 313. It went to 352. AYX ran a bunch. Chipotle ran 50 points. Amazon ran 70 points from those calls. So it was more just like a rotation into value or to growth from the value, because Apple, those kind of Microsoft had been getting so bought up. And that's why I also chose Amazon, because of the Cyber Monday, Black Friday, and then to keep the S&P propped up, they got to buy, you know, things all the time. And Apple's a little overextended, in my opinion. Microsoft's a little overextended for where we are in trade talks.
Okay, so you have a pretty holistic view of the market. Let me ask you if it bothered you with S&Ps making successive new all-time highs up around 3158, 3150, that Amazon, not even close to its all-time high. Many of the FANGs, I think there's a few that went with the market and made new highs, but does that bother you at all, since they were the darlings of the market for at least, you know,
the last
2-3 years, right? So so does that bother you that leadership is not confirming the move that we had in the market over the last, say, 4 or 5 months?
Absolutely. I think it'd be pretty easy for any of the leadership to come out and make an agreement on trade, or at least, you know, stop with the differentiate, like the different headlines that come out every day. I think I saw it was 510th day of this trade war. And those headlines are, I mean, they drive the equity market, specifically tech and semiconductors. But Amazon has been really underperforming, and that's something that I think that, you know, the rotation will come into it, out of Apple and Microsoft and into Amazon. It's also nice because you know, the market dropped 2+%, almost 3% in the last 2 days, and Amazon, you know, really didn't move too much. It was about 1%. So you can see that there's not much selling going on. I think that was mostly because of Bezos's divorce and those kind of things. A lot of skepticism around that.
Yeah. Maybe he finds a nice girlfriend and people start buying the stock again.
Exactly.
So I'm looking at channels. So that one channel in the middle of what looks like, you know, some type of you know, broadening formation. Is that a pitchfork? It kind of has a look of a pitchfork.
Kind of. It's more like a parallel channel. Just because I see. So
and with a median line.
Yeah, with a median line, because you can see that's kind of where the reversal points have been. It kind of trades along this line here and here. What I usually do is, I believe strongly in trend lines over 6 months at the bottom level. I think that, I mean, as you can see, stocks love to retrace to that. If the market's in an uptrend, or even if it's volatile, you can see the overextension here, and then that creates your outward cone. And I don't use charts. Yeah, I don't use charts as my primary thing. I like to, you have to go with the news flow and the sentiment first. But when the charts,
how do you do that?
So yeah, my number one question when I trade is the first question I ask myself is, where's the market? You know, where's the S&P? How are the general markets? And that's like looking at Apple, looking at the Microsofts, the Amazon, the Googles, because they make up the largest percentage of that. And it's really hard for the market to go up if those stocks are not. I mean, Procter & Gamble, if they're not doing well, it's hard for the market to go up. So I look to see there. And then I see other growth stocks. Like I follow Shopify, Roku, Alteryx, the Trade Desk. I trade those a lot more frequently. So this is more.
They're more reflexive.
Yeah, and they're more reflective of growth and value, and it's also Chipotle. So it depends for me. Like I see a lot of rotation now coming between value and growth, and this time, especially because of all the news. And I see, then there's just a ton of big moves that happen on a bunch of different names, and they're pretty similar moves. Like here on the trade desk, I caught this move up from 191 to, I sold about 138 here. I didn't think it would hit all the way to the top extension, but like it did. And I thought that this move, it mimicked this pattern. So I like to trade around similarities in previous movement, seeing this growth
like
value.
A fractal or a repetitive pattern.
Yeah, you can see here that, I mean, this is like hedge fund buying. That's all that is. That's big algorithm buying here.
How do you know?
You could just, I mean, look at this volumes. The volume is just
volume. Okay.
And the way the price action ticks, because I'm always watching price ticks. I watch bid and ask more than anything, and sometimes I watch level 2, but mostly just I watch the ticks, because you can see how quickly the bid's getting taken, ask is getting taken out, how quickly things are going to move. So, and I figured these patterns would be pretty similar, and so I sold about the 4th or 5th day, which got me about here. But sometimes the pattern continues.
What's your risk management tool?
I love to hedge so I mostly trade in my fund common shares. And if I'm not trading common shares, I'm doing options that are at least 1+ month out. And most of the time they need to have an earnings date behind them. So there's no, there's not much time decay on those. The premium sticks heavily on those. So for instance, here I had a small position in Roku at this level. I had very, very small position. I was just nibbling because I'd sold most of it around here. And this drop down, I sold some 150, 140 or 150, 135 verticals yesterday here. I think the net was 13 points. And I mean, it could go to 150 today. It's up $4 in pre-market. So I wouldn't be surprised to see it hit this 152 level and then back to this 166. And those verticals will go 100% net gain.
Okay, so but when you're wrong, how do you manage your risk?
Oh yeah, I mean, I have puts on all my common.
Okay, that's all right.
Yeah, it depends on my conviction for the move. If I don't believe the move is going to be happening in the next week or so, then I'll also sell higher up calls, or I'll sell out the money calls.
Kind of like yield enhancement through options.
Yield enhancement, because sometimes, I mean, Roku sometimes is like extremely volatile, and you can see the consolidating patterns here. So I'm pretty sure I sold a call right at this 139 level because I wasn't sure it was going to do the complete break up back to 170s.
Mm-hmm.
Something interesting too is I look at multiple time frames. So this is the daily on Roku,
Right.
and you see this gap down. And I think Roku trades extremely similar to something like Shopify, and on a different time frame. So for instance, like this is the daily for Shop, and you can see the hourly looks just like the Roku daily. It just Shopify got bought.
Impulsive.
Yeah, it got bought far quicker because of the great news behind it on Black Friday and Cyber Monday, and that's going to push up their EPS. So they is confirmation that they were going to do great on their next earnings. So people were buying like madmen, and I mean that's why Roku reversed as well back then, because they had fantastic earnings, but
Okay.
the market sold off, gap down to 119, but they did a beat and a raise and a couple acquisitions during all of it. So people, they were buying in a frenzy for that as well.
Okay, so I know we've been in a prolific bull market. Gosh, I mean, you've got, I've been around. I actually marked a low in 1982 when you weren't even, your parents hadn't even met each other. So do you ever take advantage of perhaps a market that looks vulnerable by shorting it? Do you ever
Yeah,
play the
so
downside in markets?
I do play the downside, and that's
Have you
something that
noticed that down is faster?
yeah, and I do. And when I see downside, most of the time, so I have a concentration of my fund in like S&P 500 tracking. So it's either a consistency of a couple ETFs that are pro shares ETFs, or it'll be Amazon shares, something big weighted in the market, just to have the market tracking on, and I know I can enhance by loaning out interest on it and writing calls and all that. But when the market does go down, I'm always holding shares of like a triple leveraged ETF, such as
Okay.
SPXU,
Okay.
which I don't necessarily like shorting. I'm not a fan of short interest, but I like buying things that I could long, and they'll make
Okay.
me to
So the
short profit.
bearish ETFs and they all have to some degree like options, maybe not as well. It depends on the
Some
derivative, but
contango.
well, like TVIX has that. It just erodes and reverse
Yeah, yeah.
splits forever. But even the bearish ETFs, and I've traded them. The uh, Quid and
Mhm.
SQQ and a lot of the bearish ETFs, double leverage, triple leverage, they have some decay in them, don't
Yep.
they?
Yeah, they do. And in fact, like, so the reason I do SPXU versus SQQQ or any of those is because that has the lowest decay over the last 2 or 3 years. So I did my
Okay.
research on which one had the least decay.
All right.
And it's honestly worth it, because if you're ever in a situation where it's a crash, that decay will turn into like premium expansion.
That's
So
right.
for
Yeah.
instance, they're at 20 now. If the market crashes, 3%, it's going to act accordingly. But the market crashes 10%, it could double. It's supposed to only go up 30%, but at the frequency and the volatility of the market, it could make it act twice as heavy on the upside. And
Interesting.
rarely is it twice as low on the downside. So it's more of it's a planned risk. It's an anticipated risk for an event that I don't foresee happening. However, if it does happen, I do know that in December it was at 22 and the market corrected, and that went almost to SQQQ went to 57, and then some way higher than that as well. So
Yeah. Okay. Interesting. So, any other issues or charts that you want to share that you have biases going into year end? And I'm understanding from your last statement that you're sanguine about the market. You think this bull market is still intact. We could have 5 to 10% corrections,
mhm.
but your view is that there's life left in the bull. And for how long do you?
Yeah.
The media is starting to talk about recession. I've never seen the media be right about predicting any economic event. So, what's your longer term view on what's happening here?
Right. So I actually drew this out because I don't think that we're in a place where this line's going to break. I don't. I mean, this was capitulation at its finest right here
Yeah, last
in
December.
last December, and I mean, and that is like the beginning of the plunge protection team and all these.
Oh,
This
they've
is
been
where
around longer than that.
but this is, I think this is where they
Yeah.
showed their hand. And they've definitely been around.
Also, don't forget the Kumbaya picture with
Yeah.
Paul and Yellen and
Yeah.
Bernanke. They
So
were they were singing Kumbaya.
yeah, this is where they said, "Well, all right, we fixed it, guys. Don't worry
Yeah.
about anything."
Yeah.
So I think this channel doesn't break. And if it
Okay.
does, it won't be to the downside. And if it breaks to the upside, I wouldn't be surprised. You know, look, I mean, that's following this line, you're getting 4,000 by 2021.
I
You know,
know another guy who I respect's talking 4,200.
some 3,800.
I respect it. Not that I don't respect you, Anthony. I could tell you, you know, I know when people know, but I've been interviewing this guy for a long time. That's been a long-term target of his. But yeah, that's interesting that you could come up with it. So that's just a measured move
Yeah,
off that formation.
off this formation. I mean, these are the biggest things that I don't follow all these technicals. I don't know how they all work, but I know that I did a thesis paper in college where I studied just upward pennants, channels, and trend lines. And I swear by all three of them, as long as the news goes in hand with it. So I think if we break down, and this is where I'm looking to buy 5x leverage, insane, get inside as much as I can. If we go to 2,500, I'm dumping the truck. I'm buying everything I can. I don't think it breaks, and I think if it breaks, the worst is going is 2,000. So it's another 20.
And you don't even have to get your parents' permission anymore.
Oh yeah, I haven't had since I was 15, really.
Let me ask you something. Are you still in your bedroom at your parents' house, or are you out there like living large, like a big tree?
I was living large, and then I put a ton of money, most of my money into my fund. And
okay,
so
you're home now?
Yeah. Well, yeah, I'm at home currently. We're rebuilding our house after the hurricane, so doing some modifications.
Oh, where are you, in Florida?
Key West, Florida. So
oh, wow. I've never been there. Here, it's beautiful.
And I don't have to pay $2,000 a month in New York, so things are going well.
Yeah, okay. Look, you know, there's nothing wrong with, you know, being with the family. I just thought it's interesting, a guy with your kind of knowledge, so young. I'd be at home too, until some girl convinces me.
Oh yeah, that's
right?
funny.
How's that going for you? Yeah,
that's how it works.
Huh?
That's how it works. Absolutely. Yeah. Until some girl convinces you to move.
So are you do you want the money so you could get the girls, or you love trading?
I mean, if I wanted the money, I would have stopped when I was, making my own money. I want to make I want to make a difference to people, because I've let people in my fund with $5,000, $10,000. I'm taking money out of myself to keep it going, to start it.
Yeah.
Just because I didn't raise too much at the beginning. It was more of a proof of concept of close family and friends. But I will be raising a ton in the future.
Let me ask you, what is the entry price to have your own hedge fund? I mean, the legal fees, etc.
I mean, if you want to do it well, which I forced myself to do well, even though I could have taken shortcuts, it was about 50.
Okay.
And I mean, and that's to keep it going for a long time. That's 1 to 2 years of cost is about 50.
Do you have a name for it?
Yeah, Peak Life Capital.
After the key. Oh, Peak Life. Why that?
I have these days sometimes where I've taken some crazy trades. I've taken 100 Amazon 320s from 90 cents to $10 each. And I've bought a car, bought a Tesla off of a Tesla trade, where I bought Leaps at $4 and they went to $40. And so I just can't think, every time of those feelings, it's just the best feeling in the world. And I'm just like, this is the peak of life. This is where all the practice, all the hard work and the passion come together, and they make you the return. And I couldn't stop thinking of the name Peak Life. And I want the people who invest in my fund to have that, have that sense of they're going to have a peak life as well. I think everyone should live their best life.
All right. So when I used to raise money for people, and I don't know why I'm echoing, but to me, everyone would always look at, the performance. To me, what was important is when things weren't working. What's your worst drawdown?
So I actually had a really tough drawdown in August to September. I mean, personally, I've had blow up accounts in my own account, because I do a lot of risky trading, penny stocks, options, whatever it is that I'm looking. And those are personal accounts that I used to do. My fund had a drawdown of about 10% in addition to commissions, which were a good amount due to the size of my fund being smaller, and I have leverage in these kind of things. But yeah, that was the third month I was doing it. And that was right during a strategy change. So I was getting out of one strategy, getting into another. and it was really tough because I'd never really traded a large amount of shares before. I was always used to doing weekly options, these kind of things where I can get in and out, no question about it. And shares are a little different because, you know, the value might have gone down a little bit. You still have long-term conviction. What do you do when the momentum and value has the worst shock in 45 years? So I doubled down on my convicted trades, hedged a little heavier, and so that 10% decline all happened in 1 month, and then the next month I made.
I lost you.
Oh, sorry. So can you still hear me?
Now I can.
Okay, yeah. So from that 10% decline and the strategy change, it's different trading with other people's money. I'll tell you that as well.
Oh, you don't have to.
What?
You don't have to.
You don't have to, but
You don't have to tell me that it's different.
Oh, you know. Okay.
All right.
Yeah, absolutely.
So tell me about it. What's it like for you? Do you feel more pressure
Yeah,
because it's not your own? And do you actually feel emotional when you were going through that 10% drawdown where you may not have blinked an eye, but people call you and say, "What's going on, Anthony?" What do you tell them?
absolutely. And in fact, I'm straight up with my investors. I let them know where we are. And I tell them, like, I've had these things before. The last 4 years, I've made 50% on average in all my accounts. So when I tell them there are months where I'm stagnant, there are months where I'm down, and then there are months where I do a 50% return in that month or a quarter. It really just depends on the market and the way that I'm playing it. And so during that 10% drawdown, I definitely did get some emotions, but I definitely did get a little worried as well. But I was only worried about how my investors would feel because I care about how they feel. I had complete conviction. And the fact that I went after that month, that was October, I returned 3% in November and then 8.9% in November. So that was my best month yet. And being able to bounce back so quickly, I think, is a great thing to show my investors too. Be like, and especially due to the allocations I had at the time, I was heavily invested in growth, and that was a significant drawdown. Most of the names I just showed you went down 50%.
Okay, so what's the best way for people to, now that they either heard you live or they're going to see the video, best way for people to follow you, is it Twitter?
The best way would be Twitter. Yeah, absolutely. I have a website as well.
Okay, why don't you show it?
peaklifecapital@gmail.com.
Okay, you want to show it?
Yep.
You know, at 22, you're not close to your peak in life, right?
Oh yeah.
And do you have a beard?
Is that
you? Is that you? The caricature on your image?
Oh yeah, that is my okay, yeah. So my website's currently down. I'm doing renovations on it. I'm adding a blog to it.
Yeah.
But yeah, if you find me on Twitter, you'll be able to contact me there. I actually have to run because the market's about to open.
Go ahead, buddy. All right. Well, thank you very much, Anthony. Great meeting you. And like it or not, you're now my trading warrior brother. Okay.
I love that. Thanks, Coach.
All right, buddy. Okay,
Appreciate
that's a wrap, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Crude at 57.80. S&P is rallying, and some nice setups here. So good luck, everyone. Remember, today's the last day for the cyber sale. And we'll see everyone tomorrow for investing.com Thursday. Adios. You're welcome, Brock. See ya.